The world is getting dirtier with every minute that passes, and it is not getting any better. Coal-fired electricity generation has surged to a record high. The Western economies want to remove this, but it will not be easy, nor it will come in the coming years. The rise in coal use is being fueled by the ongoing war in Ukraine and the booming electricity demand since the pandemic. Coal-fueled generation is on course to set an even higher record in 2022 as generators in Europe and Asia minimize the use of expensive gas. In this video, we'll cover the newest and latest information regarding this topic, and we'll discuss how we can profit immensely from this continuing trend. Hello and welcome to the Market Watcher, a place for gathering traditional and crypto knowledge on a regular basis. Following Russia's invasion of Ukraine, global coal-fired electricity generators are producing more power than ever before in response to booming electricity demand after the pandemic and the surging price of gas. Coal is both the cheapest source of energy and at the same time it is the biggest air pollutant. As seen on the next chart, we see the global electricity generation from coal between 1985 and 2021. Currently, we are at a historic 8.5% annual growth rate, while the last 10-year growth rate was only 1.2%. Before the pandemic, we saw a year-over-year decline of minus 4.3%, which was the lowest level on record. This has led to a massive rise in the price of coal, as seen on the next chart, provided by Trading Economics. Just in the past 2 years, from the summer of 2020 until the summer of 2022, the price for coal has skyrocketed enormously from $75 all the way up to $400. This is a gain of more than 630%. This has surprised almost all investors around the world, and it is quite counterintuitive due to the fact that all major economies are trying to shift their energy resources to more green and less pollutant sources, like predominantly wind and solar energy. To see the massive amount of coal which is drilled out of the ground, we can see the next two charts. On the left, we see the global electricity generation from coal in terawatt hours, which has seen a record-breaking 10,244 terawatts, and on the right, we see the massive global coal production in million tons. Coal-fueled energy generation is on course to set an even higher record in 2022 as generators in Europe and Asia minimize the use of expensive gas following Russia's invasion and the US and EU sanctions imposed in response. The geopolitical tension between Russia and the West is making the Western economies backtrack their plans of a greener future due to the fact that their dependence on Russian energy is making them politically vulnerable. While no European nation has yet reversed its commitment to phase out coal by 2030, Germany, Austria, France, and the Netherlands recently announced plans to enable increased coal power generation in the likelihood that Russia holds its gas supplies. This makes them use what they can as energy, and the cheapest and fastest alternative is coal-fueled energy. As seen on the right chart, global coal mine production was 8.173 million tons in 2021 compared with 8,180 between 8,256 million per year between 2012 and 2014. The terawatts produced are higher while the production is a bit lower, and this is due to the fact that older, less efficient coal generators are being replaced by newer and more efficient ones. On the next chart, we see the global generation from all sources versus coal-fired generation, which is expressed with a 10-year compounded annual growth rate. Coal energy generation expanded with a 1.2% annually, while all other global energy generation expanded with 2.5% per year. All other energy includes hydro, gas, wind, and solar. On a 10-year annual growth rate basis, solar is a clear number one with a massive 31.7% annual increase. Wind energy sits at an annual 15.5%, while gas and hydro are at 2.8 and 2% respectively. Coal generation is set to continue to rise through 2027, as stated by BP Statistical Review of World Energy and a report by oilprice.com. The major reasons are two. First of all, countries want to be energy independent and they are frantically trying to gather reserves, and another reason is the current and most likely highly prolonged petroleum and gas prices, which push most economies to use less costly energy sources, which in turn makes them push back the green and net zero emission agenda, at least in the short to mid-term. In Europe, governments are encouraging coal-burning generators to remain in service for longer rather than closing in case gas flows from Russia cease in the winter of 2022 and 2023. Responding to shortages and security concerns, China and India are encouraging domestic miners to raise output to record levels to ensure adequate fuel stocks and cut their reliance on expensive imported coal and gas. On the next chart, we see the Chinese domestic coal production. Each yellow line is showing the yearly production from January to June, and currently we see a record coal production for 2022 for the period of 2015 until this year. Chinese President Xi Jinping has told representatives from its biggest coal production region, Inner Mongolia, that China could not part from reality and that it is rich in coal, poor in oil, and short of gas. The energy transition is a long process and China cannot just slam the brakes on coal, according to Xi. In March, China's daily coal production hit a record high as it jumped by 15% compared to March of 2021. Also, it is important to note that currently there are coal price caps in China placed by the Chinese Communist Party, and those coal price caps are making coal miners churn over much lower quality coal, which leads to much more air pollution. China is concerned about its energy security after the autumn of 2021's power crisis and most recently the Russian invasion of Ukraine, which pushed energy commodity prices sky high. On the next chart, we see India's domestic coal production, and each yellow line represents the monthly production of coal. While the shown period is between 2019 until 2022, currently, India is also experiencing a record boom in coal production, which backs the thesis that these economies want both cheap energy and they want energy independence. Despite the rapid growth in domestic coal production in both China and India, there is still a worldwide shortage of fuel, which has sent coal prices to their highest level in real terms for more than 50 years. If the Northern Hemisphere winter of 2022 and 2023 is colder than normal, shortages of coal, gas, and electricity are likely to become severe and are likely to force some form of energy rationing or allocation. The global coal shortage is part of a wider shortage of energy evident across the markets for crude, diesel, gas, and electricity, with all major sources of energy seeing a spike in prices. Now let's discuss the ways one can profit from this emerging trend. The easiest way is to buy an ETF which tracks the price of coal, but in our case, we will discuss buying stocks which have big exposure to the sector, and we start with the more stable option, and this is BHP Group, ticker BHP. BHP is an Australian firm which deals in the mining and production of copper, iron ore, uranium, gold, and of course coal products around the world. It has operations in more than 90 regions around the world, including Australia, the United States, Canada and Chile. With a market cap of more than 120 billion, BHP is one of the largest mining companies in the world. It has a 22-year track record of paying dividends and has increased its payout to shareholders for the last 5 years in a row. It offers an excellent yield of 13.34% as of the middle of the summer of 2022. According to data from the Wall Street Journal, as of Q2 of 2022, BHP has assets worth $78.85 billion, while its total liabilities sit at only $38.56 billion. This gives it a shareholders' equity of 40.25 billion, which is a very good and stable level, showing that BHP has no debt issues whatsoever. When we see the business efficiency of BHP, we can take a look at its ROE, or return on equity, which is one of Warren Buffett's favorite metrics. BHP has a 37% ROE, while its average 10-year ROE sits at 16. According to Buffett, everything above 12 is considered to be good. Another smaller player in the coal sector which has seen massive gains is Alliance Resource Partners LP, which operates as a diversified natural resource company dealing primarily in the supply of thermal and metallurgic coal to industrial users and utilities across the United States. The company has sizable interest in the oil and gas properties as well. The total assets are $2.26 billion, while the total liabilities are only $992 million. This gives Alliance Resource a total equity of $1.23 billion. With this, we end the video. Subscribe to the channel, like the video and leave a comment if you learned something new and exciting. Goodbye for now, and I'll see you in the next video.